From AAAFx, this is Chris taking a look at the gold market. It's worth noting that the gold market has initially tried to rally during the trading session only to turn around and get absolutely hammered. As a result, it looks like we're going to continue to keep an eye on that 2000 level. And I think that is a scenario where you need to pay close attention to any dip at this point because it does give you the opportunity to pick up cheap gold. This was a very bad day for anything risk related, but then it turned around and it seems to me like bonds, gold, everything else just got hammered later in the day. We did try to stabilize a bit, but you can see New York really just killed everything. So the question now becomes, where do we go from here? Well, I think more likely than not, we will find buyers on this dip. So the closer we get to the 2000 level, the more likely I am to buy a small position. The 200-day EMA should coincide quite nicely with 1980 underneath, which I think is your floor. I think we're going to have a lot of frustration this year. This year is very likely to be more choppiness, a severe lack of being able to keep up any type of serious momentum. And I don't mean gold, I mean everything. So keep that in mind. You have to be a range-bound trader this year. There are just so many moving pieces right now that people really don't know what to do with themselves. And of course, computers, at least in New York, do something like 90% of all orders now are actually done by programs. So it reads something, everybody chases the same thing. It reads something else, everybody sells the same thing. And this is what you end up with. Longer term, I do think gold shines, pun intended. The 2075 level above, I think, is a significant resistance barrier. Anything above there becomes buy and hold. But right now, I think you're buying the dip. You're taking the profits as they come, and you're getting out of the way. It's not a buy and hold market.
AAAFx.